So let's dive right in. The very first strata we want to talk about is from a negative net worth to a zero net worth. And for many folks, this is sort of an inevitable starting point that when I come out, when I first start in my career, when I first enter into adult life and I add up all the things that I own and I subtract all the things that I owe, it turns out to be a negative number.
Yeah, and I don't want anybody, don't be scared. A lot of us come out of school with a little bit of student loan debt. You don't have a lot of assets, but guess what? You have the most valuable resource you could potentially ever want, something that your older peers will be jealous of. You have lots of time on your side. So it's okay to come out of debt with some debt. We just got to figure out, how do we pay off this debt?
Yeah, so the thing we want to think through is, if we are negative, how do we get to zero? We're going to walk through. We got to pay down debt. We have to manage new debts well. We have to build our assets, and we want to make sure that we're insuring against catastrophe. And if you can do these four things, then there's a really good chance you're going to be able to move from a negative territory on the net worth scale up to the positive territory.
Yeah, let's see how we can get people to zero as fast as possible. So, Bo, jump us off on this paying down debt, because I mentioned student loans, but for some people, this might be consumer debt, might be credit card debt. How do we want to attack this?
You have to figure out, how do I start paying off high interest debt? Because we know that compound interest can be the eighth wonder of the world. It can be amazing when it comes to wealth building, but when it works against us, it can be devastating to our ability to build wealth. So there's actually a great piece written by Daniel in Beyond Basics that actually walks through how to pay off high interest debt. What are some ways that I can do this? He walks through methods like using the debt snowball or the debt avalanche. So if you've not checked that out, you can go to moneyguy.com/beyond-basics and check that out to see, okay, what should I do? How can I begin prioritizing getting out of this high interest debt?
This is one that I often think about. Paying down debt is one of those things. A lot of your credit card debts and other things like that, they'll charge you greater than 20%.
Yep.
So how are you ever going to get ahead if you're paying twice what you hope to make out of the S&P 500? There's something to be taken away with that. We even have a rule, Bo, that we talk about. If you're talking specifically about credit cards, credit card use, completely okay. But to make this kind of rhyme out so you'll remember it, credit card debt, no way.
Now, don't mishear us. We like credit cards. We both use credit cards. But if you are carrying a balance month over month, you are doing it wrong. You might not be a credit card person. So that's a consumer side. But another debt that a lot of people fall into is auto loan debt. A lot of folks right now are buying more car than they can afford. They're borrowing more money than they should, and they're getting themselves into a pretty awful financial situation. Now, we love paying cash for cars when you can, but if you are in the negative to zero net worth, there's a really good chance that you are not going to be able to pay cash for a car. So we want to give you the tools necessary so you can make that purchase well. That's why we actually have an entire car buying checklist out at moneyguy.com/resources that will walk you through the things that you need to know before you purchase that car, so that you don't fall into that statistic of folks who are driving around their net worth statement.
Yeah, I mean, look, we say it and it's worth repeating, because I know that probably about 60% of you are new every month. We love the 23-8 rule. Remember, cash is king on paying for your car, but if you start like both of us did, right out of school, we didn't have enough money to go pay cash. We had to figure out what's a reasonable way to finance that first car that's going to allow us to get to our JOB, because that's going to be the engine to our wealth building force. So here's what 23-8 is you'll put down 20% down. You'll also make sure you don't finance it longer than 3 years. You're going to pay it off within that 3 years. That's going to keep you in check, so that you actually, because those payments are going to feel higher, because that's where the car companies, that's where the dealerships get you, is that they say, hey, don't worry about it, just stretch it out. And you'll never own this car, but that gets your payments lower, but that also lets you buy bigger cars than you actually can afford, because we want you saving and investing. We also want to make sure that your payments don't exceed 8% of your gross income. And remember, we have some overlay rules on this, is that we want those payments. You got to have your investments exceeding what those monthly payments are. And if you're ever considering buying a luxury car, think about it. If you see anything that's sitting over in Europe and you say, I would look good in that, my neighbors would be impressed by that, you better be paying same as cash, because 23.8 is reliable transportation. I'm talking about Corolla not Land Cruiser.
And look, there's a little bit of cold water, but if you're in this negative net worth to zero, you should not even be considering luxury cars. It should not even be on your lexicon. So, okay, we got to start paying down debts. We also want to manage our new debts well. The next thing we have to do is we have to think about building assets. If we're trying to get from negative net worth to at least zero, we need to start working on the assets side of the column. And we actually have a tool that you can use, Brian. We came up with a financial order of operations. It's a 9-step tried and true process to help you figure out what to do with your next dollar. Well, and when you're in that negative net worth and you're trying to get to zero, you need to focus on the early stages. You need to focus, do I have my deductibles covered? Have I looked at all the deductibles that I have, whether it be my health insurance, auto insurance, homeowner's insurance? Do I at least have enough saved up to cover the deductible if I were to have an event in one of those categories? If you can do that, you'll prevent yourself from falling into the ditch.
Yeah, and by the way, with that highest deductible, make sure that you've got that in a high yield savings account. Let's actually make some money on that. And then that gets you into a really big wealth builder. Look, a lot of you are saying, I know you guys are talking about saving and investing, but it's the credit cards, right? Because Brian just told us it's 20 plus interest. But remember, your employer for a lot of you is offering you a guaranteed 50% to 100% rate of return with your employer match. Don't sleep on that. That is a huge wealth building opportunity. It's a chance for you to jumpstart. And remember, it's typically only 3 to 6% of your compensation. We're just saying get the maximum match, and then we can move on to other things. And then step 4, emergency fund. Cash is so important in the financial order of operations. It doesn't get one, it gets 2 steps in the financial order of operations, because highest deductible covered is step 1, and then step 4 is that traditional emergency reserves with 3 to 6 months.
And one of the things that emergency reserve does is it begins to help you prevent yourself from being too far out on the risk spectrum to where you cannot control your future circumstances. Because one of the things you have to do if you are in that negative to zero net worth, you have to make sure that you are insuring against catastrophe. Emergency fund is a great starting place, but it does not negate the need for insurance. So you need to work through some insurance basics. Do you have appropriate health insurance? Do you have adequate car insurance? If you're a renter, do you have a renter's policy? If you own a home, are you adequately protecting that asset? If someone else depends on your income, or if you solely depend on your income, do you have disability insurance? And if there are people that are depending on you to be here for their well-being, do you have life insurance in place? Do you have a will in place? Just because early on your focus should be on trying to get from negative to zero does not mean that you cannot focus on these things. It does not mean that these are not things that you should be putting resources towards.
Well, I think, and this is a trap for people who are in this struggle situation of trying to get to zero. They're like, look, I don't have anything, so I'm going to cut the corner off and not even really do insurance, whether it's health insurance, whether it's car insurance. Don't do that, because look, if you go look at why people file bankruptcy and other things, a lot of times it's big catastrophic life events happen, things that you don't foresee coming your way. The good news is there's ways to insure those big risks that are out there. So don't cut the corner off thinking, hey, why do I want to pay a little bit of this towards insurance premiums when that might be what gets me out of credit card debt, or that's what pays us off. Don't skip that step, because this is what's going to keep your financial life out of the ditch, is by insuring some of these big risks that are sitting out there.